Hello, everyone. This is Andrew Berman, and you are watching the Mortgage Leadership Outlook. We come to you every week, Wednesday, to kind of bring you the greatest minds, the biggest leaders in our industry. Today, actually, I am super excited to be joined by my co-host, Tim Nguyen, who is the co-founder and CEO of BeSmartee and just a mortgage technology ninja. Tim, as always, thank you for joining us. And I'm also excited to have with us today. And this is something I was really excited when we talked about this. We're like, all right, who are some actually leaders in technology and mortgages that we could have as guests? And we came up with Christy, which I'm so excited to have. So welcome, everyone, Christy Soukhamneut, who is a CMB and also CMB's, I believe, certified mortgage planner, I believe, also, right?
Yes, sir.
There was another. Yep. And so Senior Vice President, Chief of Staff, Director of Mortgage Strategic Initiatives over at Flagstar Bank. Everyone, welcome Christy to the show. Christy has an amazing history that goes back actually to Christy being an appraiser, in high school, and right out of high school becoming a mortgage broker. So let's talk a little bit about actually, your origin story, and then we're going to get into some exciting things. Talk about how you started getting involved in technology. Talk a little bit about the Flagstar supported Fintech accelerator program. But let's start off with your history. So you're in high school and you started actually working on appraisers. Talk to us a little bit about actually how that started.
So Andrew, Tim, thanks for having me today. It's always fun to get to hang out live with folks like you and the folks that are joining us on the call. Talking history and talking, about exciting things in the industry, really makes for a nice break in the day. So thanks for getting me away from my, spreadsheets and planning and all of this to have a great conversation. So interestingly enough, a lot of kids in high school have part-time jobs. And one of my buddies had a part-time job working for an appraiser, and he was moving. And he said, "Hey, have you ever thought about doing this? I think you'd love my boss. I think you'd love to do it. I'm moving and she really needs somebody and she's busy, doesn't have time to look. Would you go and talk to her?" Her name was Lee Barkley. And like a lot of appraisers at that time, this was the late 80s, she worked out of her house. And, she had her attic converted and she was kind of a one-man show, minus having somebody who assisted her to do a lot of research and to go and help measure houses. And so I took the job. It opened up a very interesting career path. After I got out of high school, I went and took a bunch of the Appraisal Institute classes, got my certification and, started working as a trainee, to be able to do my own appraisals. Ended up working in that industry for, a number of years through college. And as I was graduating from college, as our industry does, it goes through a lot of cycles. And we were hitting a cycle where there were not a lot of loans being done, not a lot of appraisals being ordered. And the company that Lee had retired, and she connected me with another appraisal firm that was a little larger that had, 4 appraisers in it. And they did both commercial and residential and had, stayed with them. And they were like, "Look, our business basically has dropped in half. And so we're gonna need to let you go." And this was literally I think 3 days after I bought my first house.
Wow. So 3 days after you bought your first house, you're let go. You're like, all right, what do I do next? So give us an idea of, what happens then? So you're panicking, actually, in 30 days, actually, you have to make that mortgage payment. What are your options? What's on the table?
So I'm talking to my dad, and my dad had a really terrible mortgage experience just prior to that. And what was interesting about that was it was the year prior. And as he learned about the mortgage industry, he actually ended up talking to his wholesale rep. And in talking to her, he said, "Man, this sounds like a great business. I'd really like to open a mortgage company." And she said, "What kind of experience do you have?" And he goes, "Well, none, but this just sounds like a good industry." And she goes, "Fantastic, call me in a year." And he goes off, and roughly a year later is when this happened. And so he goes, "You know what, let's open a mortgage company." He picks up the phone, he calls Julie back, and he said, "Julie, it's a year later. My daughter's graduated from college. she's got this experience as an appraiser. She really needs a job. Let's open a mortgage company. And Julie says, great. What kind of experience did you get over the last year? And he goes, none. You didn't say anything about getting experience. She said, call you back in a year.
Oh.
Believe it or not, my dad's a pretty good salesman, and he convinced her to help us. And she literally, our wholesale account rep, came and trained me and helped me set up our first brokerage shop.
That's amazing. Well, which I mean, so this I'm somehow not shocked, because like this is like Flagstar's mentality of actually, the partnership approach. It's not just hey, we're here to actually to offer our loan products, but it's always been that partnership approach. I think that's why brokers seem to have multi-year multi-decade relationship with actually Flagstar. So how long till you signed up with Flagstar?
Flagstar was the third company that signed me up. So there was Julie, and he was with a bank out of Columbus, National City Mortgage. If you guys can remember those, I can still remember my rep. Sure. His name was David. He's actually still in the industry. We still connect on a regular basis. And then Flagstar was the third company that signed me up. I can't believe anybody did business with me, to be honest. But I am so lucky that there are good people in this industry that realize we want to get new folks in, and take the time to provide knowledge and share their wisdom. And I think that is one of the things and one of the reasons that I love to do mentorship programs and help people that are new in the industry, train folks and volunteer wherever I can to do those things, is because it's just paying it back for all the people that helped me.
So, and I've got a lot of questions and a lot of the things I want to know as far as the mentorship, but I gotta, before we go there, I'm curious. It's that first loan. Who's the first person that entrusted you to sit down and handwrite, because we were handwriting 1003s at that time, to handwrite actually that 1003? Who was that first person that gave you a crack?
So I think luckily most borrowers don't have a way, at that point anyway, didn't have a way to really check out your experience. And so if the agent said, hey, go and do a loan with them, they made an appointment and showed up. They dressed up in their Sunday finest back then, to your point. They came in the office. We hand wrote an application, then we typed it with carbon paper and in triplicate and Acco fastened it to a file. It was a very different process than it is today. And so I can't believe anybody trusted me to do their loan either. But again, thank goodness. And thank goodness I had some really good people around me that all those things worked out. And we had a successful brokerage shop, and then obviously ramped up to bigger things.
But what was the point that you actually like, whoa, this is me. This is my career. This is something I love, because you don't make it to the ranks that you've made it to unless you truly are in love with this industry. So what was that point where it really clicked and you said, all right, Christy, you've got yourself a career and a calling?
It didn't take long. There are a couple of defining factors when you think about your back of the napkin moments that, within the first year, being able to see the impact that you could have on people and how you could change their lives with helping them get into a home, and then counseling them through their financial situations. Because one of the things that I always did was have great conversations with folks. I love to just engage with people and talk to them about their 401ks and their other savings. And I know I still have customers who I did loans for 25 years ago that I would say, oh, you don't have a 401k? Let me talk to you about your 401k plan and why it's important. And they would bring their paperwork back to me and show me that they signed up. And one of those guys who, I did his first loan when he was 19 years old. And now it's 24, 25 years later, we're still friends. And he's like, because of you, I'm ready to retire. Right? Those are the kind of things that have a huge impact. And it's great to be able to continue those relationships. But, every day we had some of those. You guys are in the mortgage space, Andrew, Tim, so that we have kind of a stressful job. And one of my processors and I used to make this list of jobs that we could do if the mortgage industry got too stressful. Like if we decided this really wasn't for us, if this wasn't our calling. And there was like a little grocery store down the street from my office that we would go to and grab like Cokes and candy bars and other lunch when we didn't have time to actually grab lunch, because it was just, a block away. And we said, if we ever get too stressed out with this, we'll go be the cashier at the local Winn-Dixie. And one day she came back from having grabbed us a snack And she said, you would not believe it. The cashier was explaining how stressful her job was, that, giving people the right change and how they yelled at you when you didn't do it, or something happened with their groceries. And I can remember thinking, you know what? Every job is stressful. You just got to make the best of it. I'll never leave this industry. Because this is my calling.
Wow. So when you find other, Christys that are, early on in their career that have hit the point where they found their calling, they know this is an industry that they want to be with, and they have the potential, whether it's to be they go to the production route and be a top originator cranking out hundreds of loans a year, or go the executive route, and make it to the C-suite, or managing, or anywhere actually in the huge opportunities that exist in the industry. How do you mentor that person? And is it through formalized mentor programs, or is it something more informal?
I've been part of both. We have a very formal mentorship program here that we've actually just closed down a cycle, and we had a number of folks who, I had a partner here who's on the servicing side, and we mentored a group of mid-level employees from across the organization, both on the banking side and servicing and mortgage origination, that raised their hand and said, hey, we want to be a part of a program. We want to learn. And we met with them twice a month, both in large groups and then on individual basis. And we had a path. This was a path that was generated by the organization. And I think those are wonderful programs. We need those. I think in a lot of ways, it's easy for folks who want to be mentored to have that as a first opportunity. Because generally speaking, when we want to be mentored, it's like, I need help, but I don't know what help I need. And going through a structured program kind of gives you an idea of what you can expect and maybe what you would want, on the second go round. I think it's really hard to look at a blank piece of paper and design something, but it's really easy to react to something and say, yeah, I want that, or no, I don't want that. And we know that we have to give that to our partners in a lot of cases when we're designing technology and thinking about their needs. We don't just go and ask them, to the Henry Ford quote. If I had, asked somebody what kind of a vehicle they want, they told me they would want a faster horse. They wouldn't have said a car. Yeah. And we see that in a lot of cases. And I think that's the same with mentorship. So putting somebody through a program like that first is great. And then there are those folks who just reach out to you, and maybe they only have one question, or they have a specific need, and you can have a conversation, go have a cup of coffee with them, or today is a Zoom chat. And then there are those folks who say, you know what, I'd really like to schedule some regular mentorship time, but they need to be able to say, this is what I need. This is my expectation. Is this something that's going to work? And if you're asking somebody to mentor you, you need to go in with that level of detail and planning, not just say, hey, Mr. or Miss Mentor, can you do all the work and just make me great? This is, you need to go, if you're asking for somebody's time, and have some specific asks. And I think that you'll get a lot of good response there. So
if someone wants to be the mentee, then they actually want to go to a mentor, the best thing is to have a plan, to know what the outcome is. So after this mentorship, whether formal or informal, to know actually what that desired outcome, so they all have goals that they're working on mutually.
Yeah, so I'll give you an example. A few years ago, and this is a little more than a few years, because we're looking at about 10 years ago, when social media was kind of just coming out and it was a way to communicate more with your kids. And I was wondering if this could be something that would be good for my sales team. I was running a pretty large, pretty productive sales team at the time. And I said, I need to learn this, but I don't know anything about it. And so I wrote down the questions I would have, what I needed to know, how I could try it out. And I talked to a couple people, and the one person, they said, hey, I know somebody that I think could help you. And they connected me to this individual on Twitter. And the individual's bio on Twitter was pretty generic, but I reached out to this person and said, hey, this is what I want to learn. Could we have a phone call? Could you maybe share? Reached out to this human who was just a great human. Went to him with that conversation. Turns out he was the executive director of the Wall Street Journal, right? I mean, he had a pretty busy job, but he made plenty of time for me. And he literally edited my social media posts, my personal posts, every week for a year.
What? Wow.
Right?
That's That is phenomenal. That's great. So what was the, what were the words that you used, to initially, because they're getting constant DMs all the time from people, and for you to have said something, there needs to be something that you said in that DM that, made it stand out. So do you remember what the text was?
I actually asked him that question when I found out who he was, and he subsequently left the Wall Street Journal, opened up his own company. He's just a great guy, and we are still in touch on a weekly basis. But I asked him, I said, why would you choose to do this? You have so much on your plate, and I'm not at your level at this point, And he said, because most people when they come, they don't come with a plan. They don't come with any specific requests. They just look you up and they think that you're somebody that could be helpful to them in networking, that you're well connected, and that's what they're looking for. They have no specific requests. They have no idea. He goes, and a lot of people also just don't reach out. They don't even raise their hand because they're afraid. And he goes, so one, you'd be surprised that I don't get as many requests as you think I do. And two, the requests that I get are almost never thoughtful, coherent, and something that I can really respond to. And so when I get one of those, because I want to give back. Yeah. I want to be able to mentor folks. It's something that you want to have as a legacy. And that really taught me a lot. And I've used that framework when people have asked me to mentor them. And if they come with that, fantastic. If they don't, I send them back and say, if you can come up with this, I'll mentor you.
Interesting. So, give us an idea of you don't have to go into specifics of a mentor, naming names, but tell us about, what was someone that came to you that looked for your mentorship. How did they present themselves to you in their plan and their objectives that they wanted to get from, working with you?
So this was a person outside of my organization. She was very new in the business. She had just started with an MI company, as a matter of fact, and she had volunteered, and she met me through a volunteer organization, and she came up to me one night at kind of a dinner event with that organization, and she said, I really, one, I want to find a strong female because there are not many in the industry, and I need to know what I don't know, and I know that there's a lot to learn. I want to be helpful. This is what I see in the industry, like what I've learned over the last few months in my job and my training. This is what I think my gaps are.
Yeah.
Could we spend 30 minutes a week together? And I said, I can't dedicate 30 minutes a week, but what I can do is dedicate an hour every other week, right? That's the way my timing works. This is what I can do. And again, this is somebody who, that's been almost 15 years from now ago. And we still talk. I mean, we don't talk every week anymore, but we still talk on a regular basis. Recently there was somebody who called that I've known just, on the periphery of my career for a long time. We've worked at the same organization. We've worked at different organizations. She's about 10 or so years behind me in terms of time in the industry. And she came and she said, I want to accomplish this, this, and this. This is how I see it. And again, these are the gaps that I think I have. Can you help me develop a plan? And so her ask was the development of a plan. So we sat down and we worked out a plan. She executed on that plan and she came back and said, okay, this is the next thing. Can you help me do this? And, usually they're short-term in nature, right? We met for 6 or 7 weeks every week, and then we didn't talk, then we didn't meet on it for a few months other than casual, check-ins here and there. And, it cycles through like that.
Christy, I so resonate with your story. I started off in the appraisal industry as well. It was because of mentors that I rose up and eventually, landed where I am today. And I could not do without just great people, smarter than myself, giving up their time and energy. My personal life, I try to do the same. However, I read an interesting stat, something we were talking about earlier. We need more mortgage people, more professionals to mentor them into the industry, and also mentor those loan officers and originators to mentor their customers, their clients, like you did, helping that first gentleman, with 401k. What can we do as an industry to bring light to this, and bring more talent in?
It's interesting. How many people go to college and say, I want to be a mortgage lender? It's not a career path you pick in college. I don't think that we do a great job of going back into, collegiate organizations and talking and sharing what it means to be in this industry. There are a couple of organizations, I don't know if you guys are familiar with Tony Thomas, I'm sure you are, with NAMBA. He started really going to college campuses and talking to folks. And one of the things that he did was he organized internships. I had, not through his program, but through another program, I had 4 summer interns this year on my team that we got senior leaders to mentor. And they worked in different parts of different parts of Flagstar, but all on the mortgage side. And one of the things I asked them in the beginning when we were interviewing was, have you ever thought about being in the mortgage space? Every single one of them said, no, never. We hadn't even thought about banking. And we talked about what it meant to be in mortgage. Our internship program has a lot of learning. And then at the end, we had our final kind of internship dinner last week, because between this week and next week, they start going back to college. And I asked them, I said, so now that you've spent the summer with us and you've learned from a variety of different people, what do you think about this as a career? Did you learn this was something that you didn't want to do, like what I learned during my summer internship when I learned I didn't want to be an accountant? Or did you learn this is a good avenue for you? And there were some that were like, this is really not for me, but I learned a lot. And then there were some who were like, you know what? I hope that I get invited back next year to do the internship program again. Banking and mortgage is definitely something I would consider. We got to do more of that.
Yeah. Now, was it most of the people that went to the program were kind of deciding, like, I can't wait to come back. I can't wait to get into this?
So there were 5 interns that were on that call with our end of the year dinner. We had, I don't want to say the number, but far more than that, right? Like 10 times more than that throughout the organization. That there were 5 that were on my call. And 4 of the 5 said they would consider banking or in some form, and obviously some of them were in marketing and some were in finance and different aspects. They said, hey, this is something that we consider. And there was one that said, you know what, my goal is to go to law school. So unless I'm going to be your corporate lawyer, this is really not for me, but it was a great experience.
Wow. That's awesome. As a matter of fact, I've been actually at Tony's conferences, the NAMA Connect conferences, where they invite colleges to come actually and go to sessions that are presented just for them. And, it's amazing how you see actually these students, they had no clue the opportunity existed because we just don't outreach to them. But by the way, little side note, I called Tony to try to make sure that I didn't stumble on your last name. And I think actually the only one that's worse at pronouncing last names than Tony is myself. So we had a little chuckle about that. But it is phenomenal, actually, the work that NAM has done actually to get more awareness, amongst actually, this generation that is just completely oblivious as our mortgage and appraiser, just workforce just ages out. So
I think we've improved a little bit, right? I think that at one point our average age was like 60, and now we're down to about 55. So we've gotten some younger people in there, but we have a lot of work to do, to your point.
Yeah,
I agree.
Christy, what do you think about bringing more technologists into the mortgage space as well? Again, you're going to school, you want to build the cool stuff. Mortgages isn't exactly the cool stuff, but it's so necessary. It's challenging, it's wide, it's deep, you name it. What can we do better to bring more technology talent into our industry as well?
This is such an interesting question because to me, the bar is really low. We are an industry where for so many years we weren't forced to change. And I think about it from a consumer perspective, right? They use our services once every 3 to 5 years, both in terms of a refinance or a purchase. And so consumers aren't pushing us like they do other industries to make improvements. And so we used ACO fasteners and rubber thumbs for how long? Like we only recently got rid of those. In fact, I think I still see them on some people's desks when I go around. We still are a paper industry. COVID has forced us to apply a lot of technology changes. When we start talking about e-closings and RON and those kind of things, think about the fact that we started working on that 20 years ago, right? This is not a new thing. We just accelerated it. And COVID has really accelerated the need for technology and the need for disruption in our space. But what that means too is the fact that we haven't had a lot means if you are a young person and you can think differently and you can imagine it, you have the opportunity to sell it to the executives. They're listening. I'm listening. I've been listening for a long time. I love technology and innovation. You know, I have 3 bars that I measure things by. You know, and I look at what we can do and how we can not only contribute to Flagstar, but contribute to the industry. You know, as you mentioned, our tech accelerator. But one of the things I would tell somebody is, look, if you want to be able to have change and you want to create an impact, our bar is so low. Like, it's so easy to just stumble over that bar and do something cool that's going to be great and innovative. And then you can build on that and you can have a long-term career here that's really going to impact folks. I think we can also sell them on the challenge that we have in the industry, that a lot of wealth for many Americans is tied up in their home, right? The biggest portion for so many folks is here. And how do we help them get educated? How do we help people who aren't homeowners become homeowners, particularly in minority communities or low to moderate income communities? We have such an amazing opportunity to really have impact in people's lives. And we need technology to do that. One of the fintechs that we worked with in this past accelerator is a group called Home Lending Pow. And that's their focus, is how do we get increase minority home ownership? They're doing it through blockchain. They're doing it through a way for the customer to own everything and be able to see, you know, they've addressed some of the challenges of consumers, specifically minorities, that are worried about discrimination. They're worried about whether or not they're going to get approved. They have a lot of distrust for financial institutions, given, you know, their age and different demographics. So they've addressed those things in their product, and we got to work with them. We've been working with them for almost a year because we continued on with them after the accelerator officially ended. We continued on with a new project with them, you know, in an advisory capacity. But there are so many cool opportunities to do that, and if young people can get engaged, I mean, the world would be their oyster. There is opportunity is really limitless, and you get to create something of value. To me, it's like, how could you not want to? Like, how could you not sign up for that? Go change the world and make a little money at the same time.
You know, one of the challenges I've seen with mortgage technology, and this probably goes the same for all financial technology, right? Fintech, is the regulation part of it, the compliance part of it, the SOC 2 requirements, the all necessary things. And I recall that when the CFPB was formed, there was a carve out in Dodd-Frank, I think it was, that said, you know, for someone doing something innovative on the technology side, there's ways to get around, maneuver, and lighten the burden, so to give them an opportunity to blossom. Is that a true thing? And, you know, is that being taken advantage of if it is a true thing?
Well, so here's the thing. I have no way of knowing if it's being taken advantage of. You know, I wish that there was data on that, but I have no access to data, so I can't tell you. I know that the CFPB runs accelerators because the group I was telling you about, they are part of it. The CFPB is interested in innovation. They are interested in doing those things. And they do specifically in cases that I am aware of, and obviously I can't talk about specifics, but I know of cases where companies have gone to the CFPB and said, this is what we want to do. This is what we think the potential problems are. We want to know that if this occurs, you're not going to come after us. And the CFPB will look at it and say, yeah, we can agree with this. Now, you know, who knows how that works out in the end? I haven't seen that go all the way through, but I know that they certainly are open to having those conversations, or have been in the past. And I would hope that that would continue as people are looking to serve consumer interests and needs, and they need that guidance to be able to know what box to stay in, so that they can develop something that is both regulatorily compliant and helps move the consumer forward.
Wow, that's powerful.
So we got to get more people in the industry, marketing side, the sales side, the origination side, technology side. What do you see? So we get these people in, they're to see the world from a different lens. What are the cool things you think that we still haven't untapped yet, or we're not even thinking about? What questions should we be asking ourselves in terms of future technology, mortgage promotion, mindset?
Well, I think you're seeing a lot of it today, and it's created by the gig economy. how are we evaluating people's creditworthiness and ability to repay? We operate off of some pretty antiquated thought processes, and we use documents that were never designed for what they're being used for, right? Income tax return forms were never designed to calculate the level of income that you have, right? They're designed to calculate the level of taxes that you have. So what ways can we reimagine that to make it better, to both decrease the risk that an institution has, but also increase the availability of credit to folks who are working 2 jobs or who have a side hustle, if you will. They have a regular job and now they have this, but a good portion of their income comes from that. Or maybe there's somebody who works 3 part-time as opposed to 1 regular job. Maybe they do a lot of work in an independent fashion. How can we reimagine doing that? How do we look at how we verify? We've made some tremendous strides over the last few years with reducing documentation, because as we noted earlier, rubber thumbs and active fasteners with documents typed in triplicate. We also couldn't use any documents the customer brought us, right? We couldn't do it. We had to mail everything out. And I joke with guys that are new to the industry, but fraud verification, really looked at, were there creases in your VOEs and VODs to prove you actually mailed them? That was how we detected fraud. And today we're far more sophisticated than that. In a lot of ways, that's been helpful. But how do we not only look at the effectiveness, but are we doing it the right way? Are we looking at credit the right way? Does everybody need to have 3 credit cards and 1 installment loan for them to be a good risk on a mortgage with at least a 12-month history? Should we be looking at alternative credit? And if so, how do we judge it? How do we make sure that we are not increasing the risk for both the lending institution and whoever is guaranteeing it, either on the private label security market or one of the government agencies, the GSEs or Fannie Credit, or FHA, VA, USDA, right? How do we make sure that we're doing those things, but truly using technology, using artificial intelligence to reduce discrimination, to improve our ability to determine credit worthiness, and to create better first-time homebuyers, as opposed to first-time foreclosures, which we know has happened at various points in our industry.
So the profile of consumers and buyers are changing. Their scenarios are changing. And we've had such a big push over the recent years of source data, right? D1C and the like. But what I'm hearing is the data is one thing, but we got to look at different ways to analyze that data. Is that correct? And one of the things that's coming out lately is AI to determine eligibility and underwriting status. As a lender, how do you look at AI? Is it scary? Is it right on? How do you look underneath, into that black box to assess the trust in the output of an AI algorithm?
I'm definitely going to tell on my age here, but I remember the days when we didn't have DU and LP. And I think it's the same thing. When that first came out, there wasn't an underwriter in the world who trusted it. And one of the ways that they sold it was, this is not a decision. This is a tool to help you decide. And so as the industry was warming up to it, it was not, well, it doesn't matter if it says approve eligible or refer. If it's a refer, go back to your manual way of underwriting it. But if it's an approve eligible, basically you're getting a fast pass or an easy way to do things. And they had carrots that help people adopt it. And you see where we are today, where this is kind of the standard. And you even have seen where non-agency loans now go through an automated underwriting system, or they use agency findings and just say, okay, the only ineligible thing has to be X. We've made a tremendous shift in that. And this is going to be the same way, right? It's going to have to be a tool that's not a true decisioning that gives people an opportunity to get comfortable with it, right? We've got to go back and run the data. You can also go back and run historical, right? So I take that data, an AI tool, I go back and run it against 10 years worth of closed loans, or whatever your QC is that makes you feel confident and comfortable, whatever that sampling looks like. Does that tool make the same decisions? And then as a control, now I can look at the payment history of that actual customer. And did the tool give me the right decision?
Gotcha. The one thing that I've been hearing about a lot is taking tenants, right, and renters and turning them into homeowners. They have a stellar history with the landlord, but we're not leveraging that, right? And entities out there are attacking that. Do you see that as a viable metric in, credit worthiness?
Absolutely. You think about the position. We were all renters at some point. Maybe we paid zero rent because we lived with our parents, or we, paid a small rent because we lived in a dorm situation. But I really don't know of anybody that became an immediate homeowner. They did some kind of rental situation. And so absolutely, right? That's perfectly viable because that's the way everybody gets there. So how do we do it faster? And how do we give them credit for the rental history that they have? Because it's really about what portion of your income are you paying for housing. And it doesn't matter if it is rent or mortgage, it's the same percentage. Now, we also have to counsel people in what are the extra costs of homeownership. What happens when you can't call the landlord when the air conditioner goes out? Are you going to be prepared for that, and how do we handle it, particularly in low down payment situations or in situations where the debt to income ratio is stretched a little tighter? People are paying a higher percentage and they don't have that cushion. How do we encourage, how do we educate those folks? How do we make sure that there's a safety net in place in the best way possible? And obviously a customer has to take it seriously themselves and prepare those things, but how do we educate them? Because just like, you don't know what you don't know. And for somebody who's never been a homeowner or who may not have had anybody in their family who's been a homeowner that can educate them on these things, we have a responsibility to do that for folks and at least point them in the right direction, provide that information, and lead the horse to water and give them those resources.
Gotcha. Great. I want to shift gears a little bit into a little bit more technology talk here. How do you approach the buy versus build dilemma?
And that is such a good question. It's a tough one because there's so many things that you want to build and there's so many things that you want to buy. And I think that it's a point of merging the two. I don't know really any company, even as big as some of the companies are, that can build 100% of everything that they do, because they don't have the expertise. And it's imperative that we rely on the expertise of folks in the industry, of new ideas that they're bringing to the table. And you build when you can make it a point of differentiation, or when there is nothing that really suits your needs out in the space. You're being innovative. In a lot of cases, it's also speed to delivery. So it takes me longer to build something than it does to buy something and make some modifications. So if I have a short implementation window, then I certainly need to think about, well, look at that, a great resource right there. I love that. I need to think about what that speed. Yeah, can I just put like right here? It's right there. The speed to implementation matters, and you've got to look at those things and make individual choices. Don't think it's always one versus the other. There are cases where both make sense, and as an enterprise, you have to think about what your vision is and where it makes sense to do those things. And there's a lot of companies doing some really great innovations, and it makes sense to have them as partners. And then then there are times that you need to build your own.
I'd love to hear more about this accelerator at Flagstar, and without getting into specifics, what are the kind of cool things and innovation that we're seeing, and how's that adding value to the organization and the industry overall?
So one of the things that they did when they set up the accelerator, and I can't take credit for setting it up. I came in when the first cohort was going through, and just got lucky enough to have raised my hand at the right time to be on the first group of advisory folks. Jen Charters, who's our CIO, did a fantastic job setting this up, along with some other people in the organization. And one of the things they did is they said, we want to bring people to the table. We want to mentor them. We want to help them get through to the space and to provide something that's valuable. Because a lot of companies, they have these great ideas. They aren't sure how to monetize it. They aren't sure how to really create a product that's viable. And they come to sell this to you or talk to you about it. And you're like, well, if you could make these 6 changes, it would really be a great product. And then they have to go back to the drawing table, and it takes more time. So why not mentor them along the way, just like you would an individual mentor a company? And that was kind of the focus of it. And one of the things that Jen did, and she said, look, this is not just for Flagstar. Like, you don't have to sell us your product, nor, by the way, do we have to buy it. It's open to the industry. This is part of our give back. It helps us. but it also helps the industry. And what's interesting is a lot of the companies that have come through, they may have thought or said, hey, this is our key target market. And then we came in and we looked at their product and said, hey, have you thought about this? There's a need in the industry. Maybe you haven't seen it, but there's a need in the industry for this, and your technology would fit really well. Can we think about exploring that? And they have. And the two of the companies that I would give you that's the case are Stabby and Brace. And if you go and you look at their story and talk to their owners, and they may be guys that you want to have on this in this show for these type of conversations, how did they pivot and how did they benefit from the technology that they had being in the right place at the right time, because they got that input that allowed them to shift their product to something that the industry really needed, that they didn't know was a need, but they had built a technology that could not only serve the need that they saw, but a need that they didn't see. And we helped them do that, and they have obviously been able to capitalize on those things. Some great founders there with those companies.
Andrew, you're on mute.
Sorry about that. What I was saying is, in the current class of companies that are part of the accelerator program, can you talk a little bit about actually who's involved and some maybe highlight one or two of the companies?
So I would say that our current class has been paused because we're going through a merger, and that is taking up all the bandwidth of our folks. So our next cohort is not right now. We are spending the time on the merger. So the current folks, Home Lending Pal is one of the last ones that went through. And the way that they are focusing on using blockchain technology and chatbots to really engage with folks and have them have control over their data, right? So if you think about the process that you go through during pre-qualification, which I call the negative days. So they're the days prior to a contract, where as a good loan officers, or what I'm going to define as a good loan officer, there's many definitions, but by my definition, a good loan officer takes that time and collects a lot of the documentation, makes sure that the customer is really set to buy this house, and that there's going to be nothing that shows up later that prohibits the loan from occurring, right? And a lot of big producers do that, right? They have a process to gather that documentation. They know how to review it. They don't have to rely on an underwriter to calculate income. They know they've learned themselves how to do that. And that's one of the things that Home Lending Pal has put into place. They've built kind of a day one certainty type process into their product that allows the customer to look at that. They have a kind of an underwriting rules engine that they've built in that tells the customer, hey, you've got a 70% chance of getting approved for this loan, a 90% chance of getting approved for this loan. And when they're ready and they choose to apply with a lender, they can see the lender and it can say, okay, well, here's Bank A, Independent Mortgage Banker B, and Community Bank C, and here's your chances of being approved with each of these based on their credit criteria. And then the customer can go, yeah, I like this one. And they can send all their information over securely into an application that's pre-filled and that also contains that D1C information, right? So it gives the consumer a lot of control, a lot of faith back into the process.
That's super interesting.
Awesome. That's great. That's fantastic. So, Tim, I don't know if you have any more questions, maybe, going over, Flagstar's tech stack or anything else.
Yeah, let's dive into that just for a quick moment. What about getting up, vendor names specifically? Where does your tech stack start, and how deep does it go?
I feel like it goes pretty deep, and it starts at the very, very beginning and goes all the way through the end. One of the things about Flagstar is, we're soup to nuts, right? We do everything from originate loans to service a large book. And then obviously we have quite the default servicing, given where we are in the industry and given some of the folks that were here, we have a pretty, I think, tech savvy default servicing group. But as deep as I think our tech stack is, it's always changing, and we always need to add new things and look at new things. And I think that's one of the hardest parts about the industry is knowing what's under the hood and staying abreast of all the new things that are coming out and saying, how does this piece interplay with the things that I already have. So if I think about, wanting to add home search to what we do, or wanting to add it in a different way, using it for lead gen as an example, and not to say that we don't do these things already, but just as, as an example for folks who are joining us here on the call. If you didn't have that today and you wanted to add it in, how does that work? How does it work with your servicing book? How do you take a new piece of technology? There's some great vendors out there that have some fantastic ways to coach clients around their financial services. And they create ways to help create budgets and financial education. And, there's some use for that on the front end, but think about how we can use that on the back end for folks who are in the loss mitigation process and helping educate them and put them in a better position. And so not only do you have to think about the way a company is selling its product, you have to think about ways that you can use it that are unique to you and build on what your unique value proposition is. So I think that from a tech stack perspective, it behooves you to have people on your team that are, Tim, to your point, exciting and engaged with technology. Who is that college intern that can be part of your team that you can have go out and look at the cool stuff and bring it back to you to bubble up to say, hey, have you thought about this? I could see this is the way I use something. Or to have that person who's newly out of college that, hey, here's some, a slush fund, if you will, of money that go run some pilots. Go play with this. Tell us how it works. Bring us the best things.
All right. To end things, just one quick fun question, hopefully. You got a magic genie. It'll give you any mortgage tech you want. 3 choices. What are those 3 wishes?
Man, only 3. That's always hard. So Tim, when we think about, I'm sure you guys are engaged with Stratmore and have heard of their 7 deadly sins. The first thing is a way to magically improve communication. We have such a hard time in our industry with communication in a way that's both meaningful, impactful, and lands with the consumer. Our industry is full of a lot of jargon, a lot of processes, to your point earlier, a lot of regulation. So if I have a genie in a bottle, how do they use technology? How do they use everything that we have to really help us communicate with the consumer better and create a better customer experience? That would be first. Second, I want to think about the efficiency of my originators. And one of the things that happens with originators, and maybe you guys have seen this in your career, is that the process still works so similarly today as it did when I started. A realtor calls you and they say, hey, I've got Mr. Smith here, and Mr. Smith needs a loan. Here's his phone number. Can you call him? Or maybe they hand the phone to Mr. Smith and you talk to them while they're driving to their next house, and you do a quick pre-qualification. And for whatever reason, Mr. Smith doesn't get a house right then, so he falls into your stack of people you need to follow up with. A lot of loan officers either rely on automation with their technology to follow up, and it's not personal communication, or it's a sticky note on the side of their computer somewhere that they hope doesn't get blown off by the air conditioner and land under a filing cabinet. And they find it 8 months later. And then they call the customer and go, hey, how's your home search going? And they're like, oh yeah, I bought a house 3 months ago. Close with your competitor. So how do we effectively harness all of our leads? Because most originators that I've ever talked to have plenty of leads. What they don't have is a way to effectively manage them, bubble up to the top the ones that are their next best contact or their next best action, and really harness what it is the originator is good at, which is, sales and communication. How do we help them hone what it is that they do every day and create those best practices for them? So that would be my second one. If I only get one more, I want to do something for my ops team. There's a lot of redundancy that can happen throughout the processing. One of the things that you hear from Stratmore is the 7 deadly sins is I get asked for my document more than once. For whatever reason, the document just doesn't make it all the way through to folks. It gets misclassified in the portal. It never got uploaded properly. It made its way into somebody's hands physically for whatever reason. and then doesn't make it over. It gets emailed, the email didn't make it to the right person, and now the customer's getting asked for that document, and they get really frustrated. And it's also frustrating for the processor and the underwriter because they don't have that document at their fingertips when they need it to make a decision. So we can make the job of our operations and fulfillment partners so much easier if we gave them some efficient and effective ways to have the data, manage the data, and be able to have it right at their fingertips right when they need it. And so creating some technology that would make that simpler and easier to do for all the parties to help our ops team would be something I'd love to have.
You covered all the stakeholders, but I do hear a theme in everything: communication and organization. It's just people working with people at the end of the day. That's all it really is.
Great way to boil that down, Tim. You're exactly right.
Fantastic. Tim, great question. Christy, even greater response. And really appreciate, Tim, thank you for joining us again as we wrap up the last episode of the first season of Tech Stack Heroes Mortgage Leadership Outlook. Great way to wrap it up with you, Christy. Thank you so much for joining us here today.
Thanks for having me. I enjoyed the time with you guys this afternoon.
Thank
All
you,
right,
Christy.
everyone.
Thank you, Andrew.
Thanks, guys. Everyone, thanks again for joining us for another Mortgage Leadership Outlook. We are come to you live every Wednesday. Got some great things coming up. Of course, Originator Connect happening this month in Vegas. Originator Tech happening next week on Tuesday. Hopefully, you'll be joining us for that. Everyone, have a great month.